And it's time now for the business news with Nicholas Poynton, who joins me in the studio. Nicholas, you've got reports of another chief executive biting the dust. There's been a few. Who's this?
Yeah, this is Sky Television's Martin Stewart. It comes after, a couple of weeks ago we saw that mass exodus at Sky City. We've also had the head of the Kathmandu Group yesterday. He's resigning. He's moving into a senior role in the Australian Public Service. But in a statement that we got from from Sky City on the Stock Exchange this morning, it says that Martin Stewart is leaving the job after less than 2 years in the role, and that he's leaving because of ongoing border restrictions. Those have been factored into his decision. He's from the UK. He's worked a lot throughout Europe, so you can safely assume that those restrictions on international travel, that inability to get home when he wants to, that's played a real factor in him, deciding to step down from this role. So he's upped and left. He's about to return home. Interestingly, the company's chair, he says he was disappointed by this decision. He said Martin Stewart, he came to this conclusion about 10 days ago, and he says his situation isn't unique. He says that we can probably expect more foreign executives here in New Zealand looking to bolt home because if these restrictions continue to remain in place. And this also creates a bit of a headache for companies that are looking to hire talent, because it probably narrows the talent pool, because if you can probably imagine we might have a situation where foreign executives that may want to come here and work may not like the idea that every time they want to leave New Zealand and come back, they might have to spend a couple of weeks in managed isolation each time. So
the counter to that is, though, we might have to back some New Zealand talent.
And that's a good point, and that's what Sky Television has looked to do themselves. They've chosen its Chief Customer Officer, Sophie Maloney. She's been promoted to CEO effective immediately. She has over 20 years worth of experience in international media, and she'll also become the first woman to lead this company.
Yeah, and it's a tough market too, so that's going to be an interesting watch. No doubt you'll be talking about them again
And before
soon.
we move on, though, I thought I'd mention their share price. It was down 3.5% on the back of today's news, so it's trading at 16.2 cents per share.
And Westpac Bank, so it is emerging as a lone wolf in the economics community. Why? What are they saying?
Yeah, well, last night I was on the show talking about ANZ's chief economist, sort of musing over whether there was a real need for further monetary and fiscal stimulus, given the fact we've had some really positive economic indicators of late. Now, this is a view that's been shared by both independent economists as well as those economists who work at the major retail banks. They've all sort of come to this in some way, shape or form. They sort of agree that the strong performance of the economy since we came out of those lockdowns, the effect of stimulus to date has been really effective, and also the funding for lending program has probably softened the need for further action. However, into the Westpac Bank, who are becoming somewhat of an isolated voice. Its chief economist today reaffirmed its forecast that they believe the OCR will be cut and taken into negative territory, although that they have slightly changed when that will happen and how big a cut that will actually be. Because they say, despite this optimism in the economy, they believe the stimulus will be needed to push back against those deflationary pressures which will come into focus next year. That's a situation where we have falling prices and rising unemployment. That would be catastrophic for the economy. That could send us into a real, deflationary spiral rather. So I guess you could say that Westpac, they are taking a bit of a downbeat view, but economists, they aren't fortune tellers. They'll be the first ones to tell you that. So I'm sure that if we did see a material change in things through the next sort of 3 or 4 months, Westpac would be amongst the first banks to revise their outlook.
Okay, well, you've told us about Sky TV. What else was going on the markets today?
Well, it seems that the PM's comments about China may have moved the value of some companies' share prices. The NZX did close down 1/3%, about 39 points to 12,730, dragged down by A2 Milk, who significantly weighed in on our stock market. So when they go down, and they're a company that does a lot of trading with China, sort of drags everyone else down with it. And looking to our dollar, it's at 70.3 US cents, 95.5 Australian, and 52.6 British pence.
Thanks, Nicholas. Nicholas Poynton with our business update there.